Is silver about to break records? That's the question shaking the financial world right now. And it's not just a question for traders or investors. It's a question that speaks to the heart of where our entire economy, our money, and even our future might be heading. Silver has always been called the poor man's gold. But the truth is, silver has qualities and dynamics that make it even more powerful in certain situations than gold itself. And right now, as silver hovers near $47 an ounce, we are witnessing a setup unlike anything we've seen before. This isn't just another chart pattern. This is history repeating, but with a twist that could make the next chapter far more explosive. Picture this. Silver is dancing dangerously close to that legendary $50 mark. That number has haunted the silver market for over 4 decades. The first time silver reached it was back in 1980 in a world very different from today. The Hunt brothers tried to corner the silver market, leveraging huge amounts of capital to push prices up. And yes, silver spiked, but it collapsed just as quickly, leaving a trail of broken portfolios behind. Fast forward to 2011, the world was recovering from the worst financial crisis in generations. Central banks were printing money like never before, debt was ballooning, and inflation fears were spreading. Silver surged again, racing toward $50. People thought the ceiling was about to shatter, but once again, it failed. It came close. It scared the establishment, but it couldn't hold. And from there, silver crashed down again. Now here we are, in 2025, with silver once again clawing its way back to that mythical line in the sand. And here's the thing. The backdrop today is entirely different. This isn't about a few brothers with deep pockets. This isn't just about the aftermath of one financial crisis. Today's silver story is being written on a canvas much larger. The global economy, technology, energy, and the very foundations of money itself. Think about what silver actually represents. It's not just a shiny metal sitting in vaults, it's a metal that gets used. Every single day, industries depend on it. Your phone, your laptop, your car, your power grid. Silver is in all of them. The green energy revolution? It doesn't exist without silver. Solar panels, electric vehicles, wind turbines, they all need silver. And unlike gold, silver doesn't just sit idle. Once it's used in industrial applications, it's often gone forever, locked away in products that will never be recycled in a meaningful way. That means the supply-demand equation for silver is constantly tightening. And speaking of supply, here's the brutal truth. We don't have enough. Silver mining is not like gold mining. Most of the world's silver doesn't even come from primary silver mines. It comes as a byproduct of mining other metals like copper, lead, and zinc. That means even if silver prices skyrocket, miners can't just flip a switch and flood the market with new supply. It takes years, sometimes decades, to develop new mines. And during that time, demand just keeps climbing. That's the powder keg we're sitting on right now. So the question becomes, if silver finally breaks 50, what happens next? Will it be another repeat of 1980 or 2011, a spike followed by a crash? Or will it be something bigger, something sustained, something that carries silver into uncharted territory? Let's put this in perspective. Adjusted for inflation, the all-time high for silver wasn't $50. In today's money, that 1980 spike was the equivalent of around $146 an ounce. That means even if silver hits 50 tomorrow, we're still not even halfway to where it has been in real terms. In other words, 50 isn't the ceiling, it's just the door. And think about gold for a moment. Gold has already smashed through its old highs. Before COVID, gold's ceiling was $1,900 an ounce. People said it couldn't go higher, but here we are just a few years later, with gold trading at $3,800 an ounce. It doubled its old high. If gold can do that, why not silver? Historically, silver lags gold, but when it catches up, it moves faster and more violently than almost any other asset. If silver breaks 50, who's to say it can't go to 100, or even beyond? Now let's talk psychology, because markets aren't just numbers, they're emotions. They're fear and greed battling each other in real time. When silver approaches 50, a lot of investors freeze. They think, I've missed it. I should have bought earlier. If I buy now, I'll be the sucker who bought the top. But history shows us that the biggest moves often come right after those psychological barriers are broken. When Bitcoin crossed $1,000, people said it was insane to buy. When it hit 20,000, they said it was over. Then it went to 69,000. The same could happen with silver. Once it breaks the psychological barrier of 50, the floodgates could open. Momentum traders pile in, hedge funds start paying attention, and retail investors who ignored silver for years suddenly wake up. That's when things get wild. And this isn't just about speculation, it's about protection. Silver, like gold, is money insurance. In a world drowning in debt, with central banks boxed in, with currencies losing purchasing power every year, people are looking for safe havens. Gold has always been the classic choice, but silver offers something unique. It's cheaper per ounce, which makes it more accessible to the average person. And when the crowd starts moving, accessibility matters. A farmer, a teacher, a student, anyone can afford a few ounces of silver. And when millions of people around the world start buying, the demand shock is enormous. Now layer onto this the gold-silver ratio. This ratio tells us how many ounces of silver it takes to equal the price of 1 ounce of gold. Historically, it averages around 40 to 60, but right now it's over 80. That means silver is cheap relative to gold. It's undervalued. And markets always revert to the mean. When the ratio falls, silver outperforms gold. It's like a coiled spring just waiting to snap higher. So, where are we in the bigger picture? Josh Philip Farr of Scottsdale Mint compared this silver bull market to a baseball game. He said we're only in the third inning, maybe the fourth. That means we're not even halfway through the game. There's still plenty of action to come. Volatility? Yes, there will be lots of it. Silver never moves in a straight line, but the trend, the long-term trajectory, looks undeniable. And when you zoom out, the big picture is clear. Silver is setting up not just for a breakout, but for a revaluation. Here's something else to consider. When adjusted for inflation, the true highs for silver are far above where we are now. The 1980 peak equals about $146 today. The 2011 peak equals about $70. That means silver has massive room to run before it even comes close to its historical equivalent. And this time, with industrial demand soaring and supply shrinking, the foundation is much stronger than in the past. So let's circle back to the original question. Is it too late to buy silver now? The simple answer is no. If you're waiting for the perfect price, you'll never get it. If you're waiting for the perfect moment, you'll always be one step behind. The real opportunity lies in recognizing that we are at the start of something big, not the end. $50 isn't the finish line, it's the starting gun. The move beyond 50 could redefine silver's role in the global financial system, in industry, and in everyday investing. This is not financial advice, but it is a reminder. History favors the bold, and silver has a way of rewarding those who see the storm before everyone else does.